Hello, you are welcome to Unit 1, Session 2. In this lesson, we're going to look at the role of taxation in the economy of Ghana. By the end of this session, you should be able to state and explain the various purposes of taxation or the role of taxation and explain the implication of taxation on business. Let's start with the role of taxation. The government uses taxation for a number of reasons. One, we have to raise revenue. Taxation is the main source of revenue to the government, and government raises revenue through tax to cover the cost of administration, defense, provide infrastructure, to settle both internal and external debt. So we have government imposing taxes directly and indirectly, and this is all to help government raise revenue. Another role of taxation is to redistribute income. It often happens that a greater part of a nation's wealth are in the hands of a few people, while the majority remains in abject poverty. This problem is solved by redistributing income among the various social classes, and this is done through the progressive tax system. This tax system ensures that the higher income earners pay proportionately more in the form of taxes than the lower income earners, hence the redistribution of income. Another role is to check inflation. Inflation is where we have a lot of money chasing fewer goods or services. So to control or to check inflation, taxes or taxation is used, hence stabilizing prices. And we do this by imposing high taxes which will reduce the disposable income of the consumer, hence the low demand for goods and services, and in the long run, help solve inflation. We also use taxation as an anti-dumping tool. Usually, we have the advanced countries dumping goods of lower prices or quality on developing ones, and this does not offer any incentive to local industry. So to avoid this unpleasant situation, high taxes are imposed on such items to protect the local industries or even prevent their importation. Further, another role of taxation is to protect infant industry. So an infant industry is an industry that have not yet found its feet in the field of production or cannot effectively stand competition on their own. So to make them grow, we have certain incentives available to them. Also, taxes are imposed on imported goods to raise their prices, and this has effect of making imported goods very expensive, hence stimulating the demand for the locally produced goods, leading to their growth and expansion. Also, this even has an additional advantage of creating employment avenue for the local people and promoting the spirit of self-reliance. Another role of taxation is to correct balance of payment deficit. We know that balance of payment deficit results when a country's total import bill for the year exceeds its total export bill. So what do we do to correct this? We we impose taxes in the form of tariffs on imported goods, which increases import prices, thereby discourage import. So with exports remaining constant, a fall in imports may help correct the anomalies in the balance of payment. We also use taxation to discourage or control the consumption of certain goods. Taxes are imposed on certain goods which are considered to be harmful to the health of people. So, for example, we have high taxes levied on tobacco, alcoholic beverages, etc., to make their prices relatively expensive so as to discourage their consumption. So, these are some of the rules of taxation. Now, let us look at the implication of tax for businesses. Business organizations are affected by taxation in a number of ways. For example, taxes become financial and administrative burden that directly impacts the ability of business to invest or to compete in a broader economy, because um, they will only be left with an amount that is small to reinvest in the business or for distribution to shareholders as a result of taxation on profits. We also have economic activity will reduce unless government claws back revenue from taxation. Also, prices are affected when prices increase, which can reduce demand. Okay, this is in the form of to check the inflation. Then we have cost of production will increase when supply of goods and services are taxed. Then another one is VAT registration is a legal requirement for all firms whose turnover exceeds 200 Ghana cedis. So here it means that if you are a retailer and your taxable supplies within a 12-month period exceeds 200,000 Ghana cedis or more, it's a requirement that you register for VAT, even though you do not want to. You have to, because it then becomes a legal requirement. So this brings us to the end of today's session. In today's session, we looked at the role of taxation and tax implications for businesses. So we said that taxes are imposed to raise revenue for government, redistribute income, to check inflation, to promote infant industry, among others. We also said that taxes cause financial and administrative burdens to businesses that directly impacts their ability to invest and even compete in the broader economy. I hope you enjoyed today's session. Thank you.